Well, hello, Maverick traders. Welcome to the April 9th edition of the Market Roundup. Joe with you here on a Tuesday. I've got some things to talk about. Let's share it with the community. Take responsibility for the outcome. You guys know how this works. I am going to break down the meaningful news of the day, what's going on in the markets technically, and as always, we will share trades.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the market analysis, you'll see that these markets are actually creating kind of a broader range, but a range nonetheless. But we'll get into it. But first off, how did we finish? Well, flat. The Dow, the S&P, and the Qs pretty much flat on the day. The Russells as well. Oils had a pretty tumultuous push and pull going on, and gold up 0.72%. I've seen the biggest move over the last little bit. Silver, gold, mining. I'm seeing a lot of activity and overextension in that area. Go check it out. Daily news. The markets look for their next catalyst as all three have been consolidating over the last few weeks. The diamonds actually, or the Dow itself, I could say, were probably almost like a couple of months. So we're at this area of where investors don't know what's worth it, but we're very strong, so there's no real reason to sell. Most of the focus has remained on on rates and Fed speak. So we got this nice high base going on in the overall markets, let alone some of the sectors and stocks. Advanced decline line, 58% advancers, 38% decliners. So a flat day overall. We had a pretty good push-pull when it came to Thursday into Friday. So I imagine Monday and Tuesday here's taking a little bit of a break. I'll show you that in a second. Above below the 50-day moving average is sitting 62 to 38. Majorities have moved above their 50-day moving average and are also showing a little bit of consolidation. So let's just go straight into the chart. And the first one we have here is the SPY. This one's a little bit more of a move higher and a pullback than it is range bound. What I'm focusing on basically is kind of this area. The Thursday candle, obviously kind of news driven, but not a lot of volume behind it. That gap up, trade down, looked very ominous. That's big dark cloud cover, thinking, oh geez, we're going to roll over. And then Friday just kind of erased the majority of it. And here we are, Monday, Tuesday, basically at the top part of that box I drew. So it definitely in a consolidation range. This is a little bit more prominent on the other charts. So let's just go straight over to the Qs. And you'll see what I'm talking about when I draw from, oh geez, can we back here, mid-February. See if I can draw the top of the box first and go sideways. You can see that it's a little bit more cut and dry. So the 20-day moving average and the 50-day moving average are another way that you can tell. So you can see how wide it is at this area. But over the last little bit, it's getting much, much tighter. So that shows your first kind of a rounding pattern showing that it's actually going into a consolidation mode. This is not bearish at all. So the volatility that I really wanted to focus on, at least for today, is basically what we saw on Thursday going into the weekend. Candle, here we are today. We really haven't done anything, but the candle of that size is scary. You just need to make sure that you take in consideration not one day or any sort of specific event. You got to make sure that we take in consideration support, resistance, and the overall chart itself. So we really haven't done much, but I do expect that to continue. I do expect the volatility to increase as we continue to chop sideways. We've got a few things to look at tomorrow with the CPI number and some Fed speak, but we'll get there in a second. Here's the heat map. We've got big movements here. Lilly down 2.58%. Nvidia dropped a little bit, but these are all going to be pretty specific. But the overall general motion of the ocean really didn't do much. Energy and utilities, basic materials, these have been sectors that have outperformed, kind of consolidating. Once again, I've seen a big move into mining, materials, silver, gold. And I truly think that's just a little preemptive action with maybe some fears that the dollar is going to weaken. But those are more of a speculation than I think it is anything solid. It's kind of a defensive play, which we'd expect from the markets consolidating at highs. So let's not try to look too much past that. I'm going to stay at my zero. I am still a +2. I am still bullish. I am still looking for sideways to up. I like that opportunity. Yeah, there's some bearish stuff out there, but if I'm going to play bears, it's going to be sideways to down, a little bit more credit leaning. But until I see something catastrophic or something that's going to roll over, this is just too strong of an economy. It's too strong of a market. We got money being put to work, so I'm going to have to stay glass half full. Potential trades wise, I did like XLU. I like the energy or the utility sector itself. There's a few sectors out there that are actually pretty decent. Utilities had a little bit of a breakout. Disney's got a nice little pullback. It's a little bit more volatile, but it's got a good pullback. Looks like it could be bouncing off of a moving average. You guys can take a look at that. Meta is still in a range, although it exceeded it a little bit the other day, but I'll show you that chart as well. And then Baidu continues to show some weakness. Baidu is something that I don't want to be a -3 on. It's just, and most of the bears out there for me personally are going to be a -1. I don't think I could ever really go -2, -3, unless it was for a week. And I just don't want to play that game. So let's take a look at what we got. Here is the utility sector, and I just love this little high base, ascending triangle, whatever you want to call it. Let me go ahead and draw some lines here. Really good shoot to the upside. We've seen this into the defensive sectors, utilities, energy, and materials. But I just like how this has really already exceeded kind of this ascending triangle resistance that it had the beginning of the year. And it looks like it's just moving higher. Now, it is an ETF, so I wouldn't shoot for the moon here. This is going to kind of be a slow grower, something that if you believe that the move to safety will increase, this could be a nice diagonal trade, something you could play slow sideways. And then what's really cool about a diagonal, you could set that like 1 or 2 weeks out. If it hits your target and you don't think it's going to go higher anymore, you can take the whole thing off. So make this kind of a trade that's adjustable, but don't get super aggressive with it. But I do just like the ascending triangle breakout pattern. So let's move over to our sideways trade. Here is good old Meta. I've had this up here for a while, and I keep bringing it up and keep saying, hey, there's a big range here. So the last time we talked about it, folks, was right there where it was last Tuesday. And I say it was going to bounce. Maybe we'll get up to this area and check it out. It broke above it. Oh, it's a little scary, but we're almost back down to this area. So this whole sideways thing's still working. Now, yeah, sure, that could change tomorrow. This could take off, but a little bit of a push and pull outside of an area and then back in. That's kind of how you play the sideways game. But so far, it's within its parameters. I figured I'd just share it with you guys, and especially for some of those that might be in it. And then the last one I got here is Baidu. I want to emphasize one more time, this isn't something I'm a -3 on. In fact, I don't think I have a -3 trade on. And it's just because of the resilience of what I'm seeing in the markets. Now, this has a couple of levels here. It's got this larger level down here, and then it's got this little shorter level. One thing to take a look at, and this is what I've been focusing on, is it is actually kind of in this area. This is called an island gap. What happens is when a stock gap's down in between a support and resistance level, you kind of have to wait for it to confirm. So just to let you guys know, and for me to also draw another arrow, I want it to break this line here, about 102. I know that line's not very straight, but I want to see it break this area here. Let's draw it here again, here, this area. And then my target will obviously be back down here at about, what do you guys want? What was that, 90? I drew over it. Sorry, 98, somewhere there. So something -1, -2 at most, mostly like a -1. Credit side, diagonal, something of that sort. But don't get super aggressive when you got a market that is showing more bullishness than bearishness. So let's do a summary. The markets are in a consolidation area. Yeah, I love quotes. They're fun. These areas can create volatile reactions and false moves over multiple days. Huge day like Thursday, maybe even a little lower, and then the next day it comes back. Make sure you respect the ranges the markets are in and stick to the technical side and away from your opinion. It is so easy to say, oh, we're overextended. We're getting into the elections. You can talk about the rates can't be cut. This market is doomed. Why is everybody running to gold and silver? Too much opinion comes up here. Everybody gets froggy at the top. Everybody gets froggy at the bottom. But just let's go ahead and blindly follow our technicals because it's worked out for a while. Don't let any one day change your outlook or abandon adjust trades. So don't change your plan as well, folks. I know this market outlook is pretty much psychology, but we're at that area. CPI tomorrow. Everybody's going to hang on it. No one's going to know what's going on. We'll just see where the markets go with that. Refer to that bullet point above. Jobless claims, PPI, consumer sentiment. Always check potential trades for what's going out there. Let's just stick to it, folks. Follow our plans until it doesn't work. Then we'll identify what's going on and we'll go from there. Thanks for joining me, folks. Talk to you next time.